Hello everybody. In this video, I am going to give an update on my portfolio and show you all of my positions. Let's get started. Right now, my portfolio is at $236,677.93. In the past year, I am up $35,938.78. Year to date, I am down $38,625.19. The market is not open right now. It's Sunday night. However, it does say that I'm up $15,000 basically. I did want to make this video just to show you guys, where my portfolio is right now and my positions, but the market is not actually open right now. Just letting you guys know. But this gives you an idea of where my portfolio is at the moment. So $237,000 if we round up. So I'm doing okay right now. Let's go over my positions. I'm selling Amazon $250 covered calls. These expire June 26. My return $11,220. As far as Amazon shares go, Amazon is currently at $242.23. My average cost $259.30. I have 500 shares. My return, I am down $8,510. Now, Amazon is currently at $242 and I chose the strike price of $250. So if it stays around $242 at expiration, then I will keep my shares of Amazon and simply collect the money I made from selling these covered calls. $11,000 so far, and then $1,000 left to go. So total of $12,000 made from selling these covered calls, and then I keep my shares of Amazon. So that's what will happen, assuming it stays below $250 per share at expiration. If Amazon goes to above $250 per share at expiration, then I will not keep my shares. I will get my shares called away. I still make some profit overall, but yeah, we'll see what happens. I think I might roll these out if it does go to 250, but we'll see. Next up, we got Google. I'm selling Google $350 covered calls. These expire June 26. My return $8,532. And the shares of Google right now is at $366.15. My average cost, $380. I have 400 shares. My return, I am down $5,540.98. Now, because Google is at $366 and I chose a strike price of $350, that means that if it stays above $350 per share at expiration, then my shares of Google will get called away and I'll make overall a profit. Now, if it goes below $350 per share at expiration, then I will keep my shares of Google and I'll collect money for selling these covered calls. Made $8,532 so far, and there's $5,940 left to go. So I'll make a lot of money from selling the covered calls if it does go below $350 per share. Next up, we got Robinhood. I'm selling Robinhood $110 covered calls. These expire June 26. My return, $3,480. Robinhood right now is at $96.98. My average cost, $114.30. I have 2,000 shares. My return, I am down $34,661.44. Now this one, right now it is below the strike price I chose. It's at $97 and I chose a strike price of $110. So if Robinhood stays below $110 at expiration, then I'll simply collect my I'll collect my shares, I'll collect my premium that I made from selling these covered calls and keep my shares of Robinhood. I've made $3,480 so far, and then $1,580 left to go. So I guess around $5,000 for selling these covered calls, and then I'll keep my shares. However, if Robinhood goes above $110 at expiration, then I'll get my shares called away. I'll still make some profit overall, but then I won't keep my shares of Robinhood anymore. If that does happen, I might roll these out, but we'll see. Next up, let's look at SoFi. SoFi, $22 covered calls. These expired June 26. My return, $1,537. SoFi is at $17.16. My average cost, $5.77. I have 5,300 shares. My return, $60,386.75. So for these covered calls, it's well below $22 right now, so I don't think it's going to reach $22. So, if it stays below $22 at expiration, then I'll keep my shares of SoFi and I'll collect the premium I got for selling these covered calls. Let's see, $1,537, $159 left to go, so I'm going to say like close to $1,700. And I do have another position on SoFi. I'm selling the $18 cash secured puts. These expired June 26. My return, I am down $2,052. And this one, it's close because SoFi is at $17.15. I chose a strike price of $18, so this could go either way. But assuming that it stays below $18 per share at expiration, I will have to own more shares of SoFi. I will have to own 2,700 more shares. It will be as if I bought 2,700 more shares of SoFi at $18 per share. Now, if SoFi goes above $18 per share at expiration, then I won't have to buy any more shares of SoFi. I'll just simply collect the money I made for selling these SoFi puts. Those are all my positions. My buying power is $195,406.72. This is a margin account. My margin buffer is 22.09%. My margin buffer indicates how close I am to a margin call. The higher my buffer percentage, the lower my risk of getting a margin call. 22%, I'm pretty confident right now. I don't need to worry about getting a margin call at 22% margin buffer, so I'm fine with that. As for how much margin I'm using $302,506.07 of margin. My annual interest rate is 4.50%. The daily interest that I am paying is $37.69, and I'm using $1,000 of margin interest-free. That's pretty much all I have to talk about. No big news, I guess. Yeah, I'm at 237,000 right now, and I'll just have to wait and see what happens to these positions in, what is it? It's the 14th right now, so 12 more days. So we'll see what happens 12 days from now. But yeah, that's pretty much it for this portfolio update. I just want to make this just to show you guys, you know, what my portfolio is at, what my positions are. And that's pretty much it. If you guys like this type of content, please make sure to like and subscribe, and I'll keep on making more of these videos. Thank you so much for watching, and I'll see you guys next time. Bye.